Welcome back once again. I think we have managed to sort everything else that we needed so that we can hear from Anri Brink, who is from Absa Investment. She is our market analyst for today, and she's going to be wrapping up the week for us. Anri, I hope you can hear me this time. Welcome to SABC News. First, let's wrap the week that was with, let's focus on the local data that we had this week, especially that GDP. I was just saying to the viewers at home that we had that GDP that was the highlight of the week. There at Absa Investments, how can you characterize this week?
Yeah, I think certainly great to see a positive surprise coming through, particularly on the production side. Quite broad-based recovery there, so 8 of those 10 sectors expanding, and also seeing a lot of recoveries from contractions in Q1. So that's certainly being quite positive. On the expenditure side, I also saw personal consumption remaining quite healthy, so being the main contributor to the print from that perspective, and definitely fueled by a bit of a more accommodative consumer environment that we have had recently. So interest rates have come down, inflation has been fairly well contained for the most part of the year, so making it a bit easier on consumers to boost that consumption. Of course, going forward, we do need to see a bit of headway on unemployment. It does remain the biggest risk to that consumption outlook going forward. And then if we look at some of the other components there, just on some of the negatives, I think gross fixed capital formation contracting for the third consecutive quarter, really being quite worrisome, because we do need to see investment, continuing, especially on some of those structural reform measures to ultimately push the economy to sustainable growth. And then also on the export front, that taking quite a big knock, particularly sectors that do have high tariffs against them from the US, so those being your base metals, vehicles, vehicle parts and the likes, those being really hard hit, and definitely starting to see some of those tariff impacts filtering through into our local data as well.
Yeah, let's move on to the US, where we saw the inflation data that came out last night accelerating to 2.9% for August. Of course, analysts, they're saying that this is supportive of the US cutting rates. Are we likely to see the Reserve Bank follow suit here in South Africa as they meet next week?
I think it's two very different conversations. So the US Fed obviously has kept rates quite restrictive for the most part of the year, particularly because they do have those concerns around tariffs leading to resurgence in inflation, which we are seeing happening. But at the same time, we are seeing some signs of weakening in the labor market there. So definitely something that will prompt the Fed to start on that easing pathway. Whereas with the SARB, we've already seen about 75 basis points in cuts so far this year. So it has been a bit more accommodative from that side. And if we're looking at forward rate agreement markets on the local front, they seem to not be, expecting another rate cut by the SARB this year, with only expecting rate cuts to resume at the early start of next year. And I think particularly as the pathway for inflation over the next couple of months is also to remain above that 3% level, forward rate agreement markets not pricing in another cut before the end of the year.
Yeah. Andrew, let's throw forward to next week. Of course, we have already touched on that interest rate decision and what you think, but there's also inflation figures and retail sales figures. Do you think that we're likely to see inflation remain flat, or is there a chance that we could see it tick up a bit? And what do you make of the retail sales? And they've been growing quite steady over the past couple of months, and where that's heading to?
Yeah. So on the inflation side, I think the main driver, or one of the main drivers that pushed the print to above that 3% in the previous iteration, is the fact that we're starting to see those base effects from fuel inflation starting to dissipate. It is something that is expected to continue over the next couple of months. So definitely expecting to see that print oscillating around current levels until year end. And then I think overall for the year, if we're looking at SARB expectations for the third and fourth quarter, quarter, they are anticipating rates to inflation to average around that 3.6% odd level. So definitely think that is the pathway that we are going to see going ahead. On the retail sales front, they have been very robust, so recovering quite nicely to the second quarter, contributing nicely to second quarter GDP growth. Of course, as mentioned, we've had a more accommodative consumer environment with lower rates and lower inflation, but it does also come against the backdrop of lower consumer confidence, and then also just the high unemployment levels that do remain. So it'll be interesting to see how that translates into the retail sales numbers for the upcoming week.
Looking forward to that data. Anri Brink is from Absa Investment. She was our market commentator for today. Thank you so much for your time.